this is part of your homework. I'm just popping this up here just so you can see it. And we're not actually working with this particular chart of accounts, but let's talk about a chart of accounts. Remember, we have had lots of things going on. We've got lots of asset names over here. And those kinds of names have been like cash, accounts receivable, right? We've also had lots of expenses that we've been listing. Everybody agree with me there? We also have had just one accounts payable liability that we've been dealing with. Maybe one of your problems had a notes payable, I don't know. That would be like a payable to a bank. But anyway, we're dealing with that particular one. And then, of course, we've also had capital and drawing always. Okay? Well, in Chapter 4, we are going to assign all of those accounts a number that we'll be using sometimes when you don't have enough room to write out the whole name. So, in this area, you will notice that everything is always going to be in a certain order. It's always going to be like I'm starting from the left going across. So I'm always going to have assets followed by liabilities, followed by my owner's equity. And I'm going to stick drawing always next to my capital because he really is coming straight out of the capital. And then over on the other side here, I'm going to have my revenues listed first and my expenses listed second. And you can always see that by the way the numbering system goes, because these begin with the number what? 1. And these begin with 2 and 5. So you see that that's going to be consistent. Now, if you have a little tiny business, these could only be 2-digit numbers. You know, this could be 10 and 12 and 15. This could be 20, and that could be 30 and 31. Or you could have a large business, and those numbers could be really long. But remember back in Chapter 1, we talked about generally accepted accounting principles, and that means every business is going to have a chart of their accounts, and they're all going to have a number assigned, and they will all be in this order, so to speak, with the beginning of that as their numbering sequence. Okay? In our book, we're going to be using 3-digit ones. Notice that it's kind of weird. You would say, why doesn't that just start with 100, 101, 102? But you'll be able to slide other ones in amongst them, because most of the time you're going to want to list your assets as being what's going to disappear first or what's going to be turned into cash. The most liquid is the term for accounting that you would use. And of course, supplies is going to disappear fairly quickly, and equipment will be the one that's hanging around the longest, so it's at the bottom of the list. Normally, cash is going to be followed by accounts receivable because that's what you want to turn into cash just as quickly as you can. Any questions about this chart of accounts? All right, I know I kind of had to stick that right there in the middle, but our next thing that we're doing, we're going to be using these numbers. There is something important that is still missing from this journal. And Shannon talked about it just a few minutes ago, because she said, hey, we talked about a running balance. Where's the running balance? Well, at this particular point in time, this is even harder than a T account, because if Taylor's boss had come in at this point and this is all you had, and say, can you tell me how much cash we have at this point? You'd have to say, excuse me, one moment, please. You'd have to be running up and down this thing, finding all the cashes, pluses and minuses. You know, it would be an impossibility, wouldn't it? So, yes, you need this, but yes, you also need another form. Literally, it is a copy of this information into another form, and then we will add one more element to it, which is what you suggested with a running balance. Okay? So, at this point in time, what we're going to do is, if you're thinking about this as a book, then this would be every one of your accounts is going to have their own page, so to speak. Every account. So I'm going to have a page for cash. I'm going to have a page for accounts receivable. I'm going to have a page for capital. I'm going to have another page for wage expense. And you see where I'm going? All of these pages are going to be lumped together, stapled together. I know I'm talking old-fashioned paper stuff here, but that is called a ledger. Okay? and it's called a general ledger because I have every one of my accounts, all of them are going to be there. So the general ledger is going to look, if you're looking at your papers in your packet, it's going to look something like this. I have several of these on one page just because, you know, we don't want to copy all these pages, right? But literally, could cash be, you know, miles long? Yes, it could. It could be forever long because it's not like it's going to close next month. It's just going to keep going throughout your business. But basically, you're going to take the information that you have placed on inside your journal and you're going to move it. And when I'm referring to move, I'm also just saying copying, but the word for accounting is posting. I'm going to post to my ledger. So whenever I post, I first of all have to open up all of my accounts. And you open them by writing the name of the account, and you're going to assign it a number. Here. So in this instance, can you see that it is just really like a big T account? And I would love to write on this, but I'm not going to. Here's my T. Can you see it between my debit and my credit? Right there? You see the T? It's just like a T account for office supplies. There's my T with my debit and my credit. But I have added a brand new T to the side. And that's what Shannon was talking about. And my new T is my balance. It's my running balance of where I'm going to keep up with every line that I put on there. So here's cash. Here's my big T for cash. Can you see it? Mm-hmm. And then next to that, I have the same thing, but that's just where my balance is going to be going each time. In the item, at this particular point in Chapter 4, we're going to leave this blank in the word item because it's only going to be used basically for some stuff that we'll be doing in Chapter 5 and 6, which happens at the end of the month. But on our day-to-day transactions, it won't be affected. Okay? So, does this look familiar? The date will be handled just like the date on the other side. The debit and the credit will be handled just like what's on the other side, except now we also have a balance that we're running through as well. Do you remember that we had 5 steps to journalizing? We will also have 5 steps to posting. Okay? After it's written in my journal, I'm going to go to my ledger. And I'm going to take it one line at a time. First line is cash. So I'm going to go to my account that is so labeled cash. You with me? From here, my first step, can anyone care to guess what it's going to be? And we already know how we're going to write the date. It's going to be the same naming convention there that we did earlier. So I'll have my year and I'll have my month until the year and the month changes. And so I'll repeat the date. We good? Mm-hmm. I'm leaving this blank for now. I'm also leaving post-reference blank for now. So step 1 is my date. Step 2, this time I really can't say it's my debit because whenever I post to my capital, it's going to be the credit. So instead I'm going to say the second step is the amount, whatever it is. And you're not making a decision. You've already made your decision here, so you're just recopying it here. So cash is going to be a $2,000 debit. Good? So at this particular point in time, what is my balance of cash? $2,000 on the plus side, $2,000 on the minus side?
Debit.
The debit, excellent. So my running balance, which is what this little puppy is over here on this side, is going to be $2,000 on the debit. So here's, you see my T? Does that look like what we've been doing all along? And this is just going to keep a running balance on this side. So this is step 1. Step 2 is the amount. Step 3 is the balance. Step 4, I'm going to come back and pick up this column. And in fact, I'm also going to come back and pick up for step 5 this column here. And basically, what I'm going to do, the only reason for these 2 guys is going to be, this is where I got this information from. So, where did I get this information for cash? I got it from journal page 1. So I'm going to write journal page 1. There. And then I'm going to go back over to my cash inside of my journal, and I'm going to say, where did I put this information? And I put it in my cash account number 101. So there I will list 101. It's very, very important that step number 5 is the very last thing that you do. And the reason is because if you filled this column in while you were journalizing, then you don't know what you have posted. That tells you, I've posted this line, but I haven't posted this line. Once again, one of those things that just keeps you from making mistakes. So that's a very important rule to remember. I like to call that, where'd you get it? Where'd you put it? So it's an easy way to remember. So step 1 is your date. Step 2 is your amount. Step 3 is your balance. Step 4, where'd you get it? Step 5, where'd you put it? My next one is going to be, and I'm just going to pretend, can y'all just pretend that this is the next one of these little guys, because I don't have enough room on this, and I know I'm almost out of time. But I'm going to say that this was an account that's labeled capital. Are y'all with me there? What was that capital number? Was it 311, I think? So whenever I'm ready to post capital, what do? What's my date? Can you begin to see this on there? I don't know. I'm leaving amount blank. I don't fill this in yet. I do it in order. Put my date. What is my amount? $2,000 credit. Right? And what is my balance at that point? $2,000 credit. Then, where did I get it? I'm way on the wrong line, aren't I? Where did I get it? And where did I put it? The next example is going to be, do you remember down here where we took out for rent? Okay. I've already erased it. Forgive me for that. But let's say, for example, on that particular one, when it's time for me to post it, I think it happened on the 5th. I think that I took out $100. Is that right? Yes. So that was a $100 credit. What do I do when I get to my balance? This is what's important for me to show here. I have $2,000. I spent $100. What is my new balance? Think about it in your brain. $1,900? Is that my new balance? I'm still on the debit side, which is the plus side, right? And I got it from J1, and I put it over on 101, or whatever that account number is. Now, this is what I see many students do. They will come here, and they will put $100 here. You would be very, very angry if you had $2,000 in the bank, and you wrote a check for $100, and the bank said, congratulations, you are now overdrawn by $100. Wouldn't you? Would you be very angry about that? That's what that says. Because that's a minus on the credit side for your cash running balance. So don't think that you're just peak and repeat here. This is your running balance. So debits and credits subtract from each other, don't they? $1,500. And now when you put $400 in, what happens? And now how much do you have? $2,300. So do you see how your balance is going to be? Now do you also understand why we said the normal balance for cash is on the plus side, which is on the debit side? At the very end of this, you're going to have what they call a trial balance. And basically what that trial balance is, you've already done one. You did it last chapter, because you're going to take your balance of every single account, you're going to list them debits and credits, just like you did last chapter, and see if they balance and all your debits equal all of your credits. You good?